There weren't many investors shelling out for stocks today. The ASX was off 2.3%, not just here, but across the region. It followed a drop on Wall Street overnight, and the tech-heavy Nasdaq was down a sharp 3.5%. What's going on? Well, the financial press is awash with headlines about bond markets. Our friends at the AFR are calling it a bloodbath. Bonds are simply IOUs. Say you buy a government 10-year bond. That means the government that you bought it off is promising to pay you back in 10 years, and in the meantime, they pay you a fixed interest rate. And those rates are rising. Here are the US and Australian government 10-year rates. Rising bond yields are normal when economies pick up because investors move away from safe havens and governments have to pay more to get your cash. In the last week or so, the Australian bond yield in particular has accelerated. And this is a problem because it means higher borrowing costs. Not what central banks want, just at the infancy of our big economic recovery. Typically, when bonds rise this rapidly, stock markets fall, as this US market chart shows. So that's why we've seen this big sell-off. All sectors were hit hard here today, none more so than the specky tech sector. Afterpay had its fourth worst day ever. Shockingly, AMP was our top performer. It announced the sale of part of its asset management business, the best bit of AMP, to US-based Ares Management for $1.4 billion. And if you think I'm being unfair about AMP, have a look at this sentiment chart. Green is the market feeling positive about the firm, red is the opposite. The Aussie dollar has come back from 80 US cents, but be prepared for it to head north again soon. That's finance.